Welcome to Momentum Monday. Today is June 15, 2025. Happy Father's Day to all fathers. We're looking at the chart of the Nasdaq 100. And as you can see here, the number of distribution days has increased in the past couple of weeks. Distribution days, a down day on a volume above the previous day volume. And you can see here the bigger red candles that started to appear more frequently. And the big reason behind that distribution lately has been, not only that indices have been a little bit extended above the rising 50-day moving average, above the rising 20-day moving average, but also mainly the big jump in crude oil prices. Crude oil went up about 20% last week after the Israel and Iran war escalated, and they started to send each other missiles and drones. So all of a sudden, the market is not really paying so much attention on tariffs, and the talk is about the war in the Middle East and about the crude oil prices, since they're at the foundation of many other prices in the economy and in people's lives. So crude oil up. Looking at the futures, it gapped up a little bit, but then it sold off. It's still up 20% compared to last week. This time, stocks are holding relatively well. You would have expected a bigger pullback when crude oil jumped so much, but no. So far, the U.S. Stock indices are looking stable as of right now. So any pullback to rising 20, even rising 50-day, it's a normal price action, even though such a pullback would cause a significant drawdown in a typical momentum stocks. If an index pullbacks 5-7%, the momentum stock can pull back 20, 30%. They're just a lot more volatile, and they're not just for everyone's portfolio. So obviously, with crude oils going up, we saw a rally in energy stocks, and the energy sector has been one of the worst performing sectors in the past few years. Now it's back to its 200-day moving average. This is XLE, the energy ETF. So it will be interesting to see if to manage to break out and start to lead. If that rotation is going to last more than a few days, and obviously this depends on what happens in the Middle East and how many of the oil producing infrastructure, how much of the oil producing infrastructure is impacted over the next few weeks. And we'll keep a close eye on it. Obviously, military-related stocks are gapping up and rallying hard. PLTR, obviously PLTR made is at all-time highs. I think right now it's trading about 140 from what I saw in the overnight session. But also many of the other like drone-related, missile protection-related stocks near all-time highs, at all-time highs. KTOS, um, DRS is another one. And then we have, LMT here trying to wake up. They had not a great year, really, not a great 6 months, but now they're waking up as the market is expecting that an escalating war could lead to more profits for those companies. NOC, you can see big range expansion on Friday. Outside of energy and military, the groups that really stood out after the war began are fertilizer related stocks. You can see CF breaking out here to new 52-week highs. MOS, another one. NTR, I think is another one. And also farm related products, stocks like BG, big range expansion on Friday, stocks like ADM, Archer Daniels Midland. This is market's way of showing that a war could probably lead to higher food prices in a way. Obviously, gold made new highs, new all-time highs, as it has become the go-to safety assets for money managers around the world. And this time around, uh, we cannot say the same thing about US Treasuries. US Treasuries used to see a huge beat anytime there is a global conflict. Money would pour in into the perceived safety of US Treasuries, but not this time around. And you can see DOT, it tried to bounce last week, but it didn't follow through. It pulled back, and there's just not enough demand for US Treasuries, which also obviously impacts interest rates. When Treasury rally, interest rates pull back, and vice versa, and interest rates just remain high, and people continue to require the US to pay much higher interest rates for the debt that it wants to take. So I think this is it's not talked enough about this. I think this is a major, major change in global macroeconomics and in global market relationships. That the fact that US treasuries are not rallying in the face of a global conflict, that people prefer to hide in gold and in cash and probably in some crypto, but not in US treasuries. I think this is a huge, huge red flag. Um, what else? On Friday, interestingly, we also saw a strength in many solar stocks, uh, which shouldn't be really a huge, huge surprise as if oil, spikes further and if oil prices remain elevated for a considerable period of time, which we don't know if it will happen, but obviously if the war escalates further, it is likely. Then this would be positive for solar stocks. This would be positive as an alternative source of energy. And from what I hear, also they're currently one of the cheapest sources of energy, really. This would also be positive for electric vehicle manufacturers, as obviously if we see a big spike in gasoline prices, uh, the adoption of electric vehicles will be accelerated. So, this if something like this happens, these are not trends that are going to play out um, within a week or two. These are like multi-month trends. So we'll keep an eye on that. Um, Another major move that stood out last week for me was the price action in rare earth metals. There's really only one US company um, that is having any sales in this sector is MP Materials. There's only the only company that actually like mines rare earth metals. But even this company relies on China for their refinery services of those rare earth metals. And it's pretty obvious that the US government wants to become less dependent on China. And when it comes to such materials of strategic importance as rare earth metals, because they're used in so many vital technologies. And this is why the US government has already invested in MP materials projects, and they will probably continue to invest heavily. And this is why we see this notable relative strength last week. It broke out on huge volume to new 52-week highs. And here's a longer term chart. It's a monthly. And this company is starting to act as a new potential price leader. I do have a position in this one, full disclosure. Another factor that stood out last week was the really successful IPO of Circle, who are the owners of the most popular, the most successful stablecoin USDC. And I'm super bullish on stablecoins in the long term. And I don't know if buying Circle here at this valuation will lead to market beating returns in the next few years, but obviously the market is super excited about that technology, and we're seeing companies like Walmart and Amazon talking about considering creating their own stable coins in an attempt to pay less in card processing fees. Um, they said they could save billions if they go through with it. And maybe this is why we saw some weakness in Visa and MasterCard on Friday. Nothing big, obviously big volume, but they're still closed above their rising 50-day. They're still trading above their rising 200-day. So it might have been just a short-term shakeout, short-term scare, but definitely it is a trend to keep an eye on. And I think that's all I have for this week. See you next week.